This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Exclusive club. Amazon does something few have done before. It hit $1,000 a share. But is it worth buying even at this pricey level? Increased pressure. Can the recent issues with the airlines be traced back to Wall Street demands? Hard lesson. Sky-high home prices in America's tech hub are making it tough on teachers. Those stories and more tonight on Nightly Business Report for Tuesday, May 30th. Good evening, everyone, and welcome. I'm Sue Herrera. Tyler Matheson is off tonight. Amazon, the company that revolutionized the way people shop, can add another milestone to its resume. Its shares crossed the $1,000 mark for the first time today. It's an impressive feat that only 4 other U.S.-listed companies share. That puts Amazon's market value at roughly $470 billion, about double that of Walmart. It's more than 15 times the size of Target. After hitting $1,000 a share, the stock pulled back just a bit, closing just shy of that mark at $996 a share. But it was enough to put Amazon CEO Jeff Bezos within striking distance of topping Bill Gates' wealth to become the world's richest man. Tonight, we start with a look at how Amazon got to where it is today. May 15th, 1997, Amazon debuts on Wall Street. Shares were priced at $18 and closed at $23.50, up 31%. 4 years later, during the dot-com bust, stocks hovered near all-time lows. Many internet companies fold, but Amazon weathers the storm. Then came the growth. Amazon rolls out its Amazon Prime membership service and guaranteed shipping. Tens of thousands of people sign up in the first month. The following year, the launch of Amazon Web Services, a secure cloud services platform for businesses. Today, Amazon Prime is one of the world's most popular subscription services, with tens of millions of members. Amazon Web Services is now used by more than 1 million customers and has a third of the market share for cloud spending. May 15, 2007, Amazon turns 10. Closing price that day, $60.58 per share. Now, a decade later, shares break the $1,000 milestone. In the 20 years since its IPO, Amazon is the third biggest company in the S&P 500. Shares of Google parent company Alphabet are also closing in on $1,000 a share. And this comes as a new report shows that most active fund managers are heavily invested in the so-called FANG stocks. That stands for Facebook, Amazon, Netflix, and Google, which have returned nearly 30% this year. A.B. Mendez is portfolio manager at Frost Investment Advisors, and he joins us to talk about that. A.B., welcome. It's nice to have you here.
Great to be back. Thank you, Sue.
Let's start, first of all, with how you feel about the FANG group in general. I mean, they've been on quite a run.
The FANG stocks, and I'll qualify that and say Netflix is a bit of a different animal from the rest of that FANG basket, but all those companies are creating tremendous value for consumers. I think pretty clearly they're creating transformations in the economy, in technology, in media, and in many other corners of the economy. So to the extent that they are driving a great deal of value creation, I think a lot of the move in the stocks is justified, although it has been a little bit of a breakneck pace over the last 6 months.
If you are a long-term investor, should you trim some of those positions and maybe wait for a pullback before you get back in, or do you let it ride?
It's a great question, and we kind of grapple with these issues on a day-to-day basis. But we are long-term investors at Frost, and we've been involved with all these companies except for Netflix over a multi-year period as investors. Netflix we added in fall of last year, and it's worked well thus far. But yes, I think it's just common sense when a stock or a group of stocks have had a big run. I think it's common sense and good risk management to take a little bit off the table and to trim those positions and bring them closer to where your target allocation might be. And so that's how we think about it, at least.
What about Amazon crossing that $1,000 mark and closing just below it? Is that significant in your work or not?
I don't think so. I think $1,000, investors will look at that and try and attach significance to it because it's a round number. But, looking back at the stock over the last 5 years, today it's right at the 5-year average on a price to cash flow valuation multiple basis. So there's nothing really out of whack there. And it's actually below average on a price to free cash flow as they're converting a little bit more of the earnings into free cash flows.
And very quickly, how do you feel about the market overall?
Overall, things can sometimes get a little bit dicey heading into summertime when there's less volume and some of the traders and investors are away from their desks. So you worry about a geopolitical event with what's going on in North Korea, other parts of the world. But other than that, I think that I'm not going to say that it's a Goldilocks economy. We have a good, strong economy here, at least in the U.S., and seems to be improving in other parts of the world. So, relatively benign, I'd say.
All right, we'll leave it there. A.B. Mendez with Frost Investment Advisors. Thanks so much.
Thanks.
On Wall Street, the S&P 500 and the NASDAQ snapped their 7-day win streak, but a rise in some technology stocks helped cap those losses. Declines in banks and oil stocks contributed to the loss. The Dow Jones Industrial Average lost 50 points to 21,029. NASDAQ was off 7, S&P 500 fell 2. But in this holiday-shortened week, there is a lot on the calendar. Dominic Chu takes a look.
It's a holiday-shortened trading week on Wall Street, but that doesn't mean we won't get some fireworks on the heels of Memorial Day Monday. The week ahead has a number of notable things to keep an eye on that could move the market. On the macro, bigger picture economic front, among the important data points to consider that are coming out, we're going to get pending home sales tomorrow, which measures how many previously owned homes are under contract for sale but haven't yet closed. Now, it's seen as a leading indicator for existing home sales. On Thursday, we're going to get manufacturing data as well as auto sales numbers for the month of May. And that leads up to Friday when we get the May jobs report, considered by many to be the most important economic release each month. We're also pretty much done with earnings season this quarter, but there are some notable reports that are yet to be released. You got luxury goods maker Michael Kors and cybersecurity company Palo Alto Networks among those that report results this week. And outerwear company Canada Goose gives its first ever earnings report as a public company. It's also worth keeping in mind that many expect lower trading volumes during the week, given that many are on vacation. Now, as a result, markets could be more volatile since it might not take as much positive or negative news to sway the fewer number of traders involved. For Nightly Business Report, I'm Dominic Chu from the New York Stock Exchange.
A Federal Reserve official today said he expects the central bank to raise interest rates 2 more times this year, while at the same time reduce the size of its balance sheet.
We can do 2 rate hikes and begin the process of reducing balance sheet. And the individual tactics, meeting by meeting, I think are less important than the overall plan.
The Dallas Fed president also said he was concerned about the recent weakness in inflation data, a concern echoed today by his colleague, Fed Governor Brainard.
Today, there's little indication of a breakout of inflation. Rather, the latest data on inflation have been lower than expected. If anything, the puzzle today is why inflation appears to be slowing at a time when most forecasters put the economy at or near full employment.
The Fed has raised interest rates twice since December, and many investors expect the central bank to hike again at next month's meeting. Consumers spent at their fastest pace in 4 months, perhaps bolstering the case for an interest rate increase. The Commerce Department reported a 0.4% rise in April in personal consumption expenditures. That may be because Americans had more money to spend. Personal incomes rose the same amount last month, also up 0.4%. Home prices are also higher. They rose in March at their fastest pace in nearly 3 years. According to the S&P Case-Shiller National Index, supply shortages helped drive prices up nearly 6%, significantly outpacing income growth. Credit scores for U.S. consumers hit record levels in April. According to the Wall Street Journal, Americans are enjoying improving credit scores as the job market fell and the economy grew and people's recession wounds continued to heal. The average credit score around the country hit 700, the highest it's been since 2005. But what does that mean for the overall economy? Gus Fauché, the chief economist at PNC Financial, joins us to talk about that now. Good to see you, Gus, as always. It sounds like pretty good news for the economy.
That's right. What we're seeing is people are in better financial shape. They paid down a lot of debt after the Great Recession. And then also what we have is people, the bad events from the Great Recession, foreclosures, bankruptcies, those are gradually disappearing from people's credit histories.
So when do we start to see that impact the economy, or are we already starting to see it?
I think we are starting to see it. So auto sales have been very strong over the past couple of years, so we do have more auto loans as people's credit scores improve. We're seeing a gradual pickup in the housing market, so we have more people moving into home ownership. Some of them have been delayed because they have a bad credit history, but as their credit scores get better, we'll have more people purchasing homes, and so that's very good news for economic growth.
At what point, though, we've done this story numerous times on Nightly Business Report, debt levels are also going higher. Are you at all worried about that? Even though credit scores are up, debt is increasing as well.
I'm not that concerned about that. If we look at debt as a share of income, that's actually near a record low. The total debt level is about back to where it was before the Great Recession, but the economy is much larger. So I think if we need to look at it as a share of income, I think it's at a sustainable pace right now. And I think that consumers are being much more cautious with credit than they did during the housing boom.
Is this investable, do you think? I mean, when you say that it's going to trickle down or it is trickling down to the economy, does that argue for maybe investing in the banks, investing in the auto companies as their sales of either loans and mortgages and or cars continues to grow with better credit scores?
In terms of autos, I think that it's tough to see sales moving a whole lot higher. They're near a record high right now, and people have been buying a lot of cars over the past few years. I think that we may see an improvement in the housing market, so people are better able to get mortgages, and there are a lot of people who've been wanting to purchase a home but haven't been able to do that. So I think that housing-related industries in particular are going to benefit from these higher credit scores.
All right, Gus, thank you so much. Pleasure to have you with us, as always.
Thank you.
Gus Fauché with PNC Financial. Still ahead, high-flying profits. The airlines are doing better financially, but is that performance coming at a cost? Goldman Sachs is coming under fire for buying Venezuelan bonds. The president of that country's opposition-led Congress accused the bank of financing a dictatorship. The accusation follows a Wall Street Journal report that Goldman Sachs bought nearly $3 billion in bonds issued by the Venezuelan state oil company. Critics say that purchase gives a lifeline to a government that is starving its people. In a statement, Goldman said, quote, "We recognize that the situation is complex and evolving and that Venezuela is in crisis. We agree that life there has to get better, and we made the investment in part because we believe it will," end quote. There has been some talk about expanding the laptop ban on airplanes. Well, today, the Department of Homeland Security, in a call with European officials, made it clear that a large electronics device ban is still on the table. And this comes just as people get ready to go on summer vacation and could mean tighter security at airports. Phil LeBeau has more.
Just as a record number of Americans are preparing to get away this summer, the federal government is looking at tighter security in airports and in the air. As the Secretary of Homeland Security says, the threat to commercial aviation appears to be growing.
There's a real threat. There's numerous threats against aviation. That's really the thing that they're obsessed with, the terrorists, the idea of knocking down an airplane in flight, particularly if it's a U.S. carrier, particularly it's full of mostly U.S. folks, people. It's real.
Because of those threats, the Department of Homeland Security is looking to extend the ban on passengers carrying laptop computers on international flights. Restrictions already in place for flights to the U.S. from some airports in the Middle East. Extending the laptop ban for all international flights in or out of the country would impact more than 500,000 travelers every day. Carriers like United Airlines, which have large international networks, are already making contingency plans. Just last week, United CEO Oscar Munoz said the airline is in regular contact with the Trump administration, so it can be ready if security procedures change. Would a laptop ban on all international flights prompt some travelers to cancel their trips? Perhaps a few. But most experts believe that travelers will likely just grin and bear it and adjust to new rules designed to keep them safe in the sky. Phil LeBeau, Nightly Business Report, Chicago.
British Airways said a power surge at one of its data centers is likely at the center of the computer failure. And that failure forced the airline to cancel all flights from Gatwick and Heathrow airports on Saturday, disrupting the travel plans of tens of thousands of people. The airline resumed full service today. But in overseas trading, shares of British Airways' parent company fell as investors grew concerned that the company's quality of service may have been undermined by the recent cost cuts there. From overseas to here at home, the airline carriers are feeling the pressure. And according to the New York Times, Wall Street may be partly to blame for some of the recent problems, as some carriers are focusing on maximizing profit. Nelson Schwartz, economics reporter, wrote about it for the paper, and he joins us now to talk about that. Nelson, welcome. Nice to have you here.
Great to be here.
How is it different now for the airlines focusing on profit than it was, say, 5 or 10 years ago?
Well, everyone remembers all the bankruptcies and the consolidations and, equity holders literally being wiped out. The airlines are new companies now, essentially, and they've remarketed themselves to Wall Street as a very different kind of investment. So it's a very cyclical industry where you don't cover your biggest cost necessarily. You don't know what it's going to be, fuel. But the airlines have kind of said to the street, look, we're going to deliver year in, year out, steady profits, steady growth, and you can rely on us the way you would on an industrial company or utility. And that puts tremendous pressure on the airlines to deliver to what the street expects nowadays.
What about the pay structure for executives? In the past, it was very different for the airline industry than it was for some other large-scale, perhaps more Main Street type companies. Has that changed?
Yeah, in the past, airlines say maybe a third or more of CEO bonus and other top executives' bonuses were tied to operational factors like lost luggage, on-time arrivals, customer satisfaction. Some airlines, like American, have dropped that entirely in figuring out the bonus structure. So for American, it's strictly financial metrics like, return on investment, profit margin, that kind of thing. So the customer doesn't really get factored in. Now, right. United scaled that back. They scaled back the operational factors. Then they had that incident in Chicago. It was a public relations nightmare in April. They put into their proxy that they're going to sort of build back up operational factors, i.e. customer service, into CEO pay. But, it's a little late in the game.
Yeah, it certainly seems that way. So in essence, if I'm hearing you correctly, the customer satisfaction metric, which used to be very important for the airlines, is now almost last on the list because they're beholden to the profit and loss statement that Wall Street is looking for.
Yeah, exactly. And I think, look, every publicly traded company has to grow earnings, has to deliver to shareholders. We know that. The question is, has the airlines kind of overpromised what they can deliver in terms of earnings growth? I mean, the economy is only growing at 2%. That's how fast airline travel is. So if you promised 5, 10, 15% annual earnings growth and you're only growing at 2%, something's got to give, and that's been customer service.
It certainly has been lately. Nelson, thank you very much. We appreciate it.
Thank you.
Nelson Schwartz with the New York Times. TiVo shares jump after a favorable patent ruling. That's where we begin tonight's Market Focus. An initial ruling by the International Trade Commission on Friday regarding the TiVo set-top boxes determined the cable giant Comcast violated 2 TiVo patents. A final ruling is expected in September. Comcast is the parent company of CNBC, which produces Nightly Business Report. TiVo shares popped 14% to $18.70. Shares of Comcast rose fractionally to $41.10. Wedbush Securities downgraded Buffalo Wild Wings to underperform from neutral, saying the restaurant chain's current strategy will pressure margins and earnings. Activist hedge fund Marcato has been calling for change at that company, but the Wedbush analyst says Marcato's plan isn't expected to help. Shares of Buffalo Wild Wings fell nearly 4% to $145 even. Offshore drilling contractor Ensco will buy rival Atwood Oceanics in an all-stock deal worth nearly $850 million. ENSCO said that the deal will allow the combined company to serve an even larger group of clients. ENSCO's shares fell 5% to $636, but shares of Atwood Oceanic took off following the news, rising 24% to $10.04. The biotech company Gilead says its experimental HIV drug, when combined with other medications, did well during 4 study trials. Gilead says it plans to apply for approval in the U.S. as soon as this year. The shares were up by a penny to $64.49. It is no secret that high-tech salaries are driving up housing costs in and around Silicon Valley. Those higher costs are also driving out lower-paid workers. And as Aditi Roy reports, it now appears that teachers are getting squeezed.
Etoria Cheeks has a master's degree, a stable job, and an annual salary of about $75,000. Yet, for the past year and a half, she's spent too many days not knowing where she would sleep at night.
I just had to kind of be able to stay on the move, and I kept everything in the bag because to unpack, it didn't make sense.
Cheeks is a math teacher at a San Francisco public high school, and she says she can't afford to rent a one-bedroom apartment. So she's lived with roommates, then moved into a hostel, and at one point even spent a night in a homeless shelter.
I wasn't prepared for what happened.
Cheeks is not alone. Housing experts say high-tech salaries and low inventory are squeezing teachers out of the city. The problem is so acute, San Francisco Mayor Ed Lee recently committed spending $44 million towards a teacher housing project in the city, which would offer educators subsidized rents.
Well, it's a great start. Anything that you can do to increase the affordable supply will make a meaningful difference, but it's not enough. This is a national problem.
Many teachers in the region make on average between roughly $70,000 and $80,000. But a recent Redfin study found there are no homes in either San Francisco or Silicon Valley that are affordable for teachers to buy.
The service people, especially teachers, should be able to find decent housing.
This housing development in Santa Clara, California, was built more than a decade ago in the wake of rising rents. Teachers who live here pay below market rents. Cheeks says she'll be moving again soon, this time to a rent-controlled apartment in San Francisco, a place she hopes she can finally call home. A spokeswoman for the San Francisco Unified School District tells me while their overall retention rate has remained pretty consistent over the last decade, it has become tougher to recruit new teachers. Meantime, it could take up to a couple of years for San Francisco to build its teacher housing development like the one here in Silicon Valley. For Nightly Business Report, I'm Aditi Roy, Santa Clara, California.
Coming up, slow start. Hollywood just did something it hasn't done in nearly 2 decades. Here's a look at what to watch tomorrow. The Federal Reserve releases its Beige Book, an anecdotal look at economic conditions across the country. A report on pending home sales will tell us how many home buyers signed contracts in April to buy existing homes. We'll also get the latest read on mortgage application volume. And that's what to watch for on Wednesday. It was the unofficial start of summer. But for Hollywood, the usually hot movie weekend was unseasonably cold, and shares of publicly traded cinemas felt the pressure. Julia Borston has more on Tinseltown's box office blues.
Everyone on the beach is talking about you guys.
This past weekend at the U.S. box office was the worst Memorial Day weekend in 18 years. It was Paramount's Baywatch that dragged the holiday weekend down. Despite starring The Rock, it disappointed with just $27 million in the U.S. since it opened Wednesday.
It's a disappointing start, of course. You know, when we see a weekend like this, a prime movie-going weekend, not live up to the expectations, we all get a bit nervous.
Pirates.
Disney's Pirates of the Caribbean Dead Men Tell No Tales won the weekend, but had the lowest U.S. opening of all but the first of the 5 Pirates films, $77 million. That was balanced by a massive $208 million opening overseas, bolstered by China. And Disney still tops the U.S. box office this year with nearly a quarter of the market so far. But Memorial Day weekend's results give Hollywood studios more reason to worry about audiences getting fed up with movies that recycle the same old ideas. And there are a couple factors at play. There could be franchise fatigue as some of these characters stick around for a while, with Paramount debuting the 5th Transformers movie and Sony the 6th Spider-Man this summer. And there are more options for fresh content on TV and streaming than ever. Plus, when a movie disappoints, word spreads fast.
I think film critics are more important and more influential maybe now than they've ever been before. With so many options for your entertainment options over a weekend, people are looking for quick decisions. And so, they'll look for reviews and like, help me make my decision. Do I go barbecue or do I go see Pirates of the Caribbean?
But hopes are high for Warner Brothers' Wonder Woman to jumpstart the summer season when it opens Friday. And it's not all bad news. While the U.S. box office is down 9% since the beginning of May, it's actually up 2% total this year. And the overseas box office has been soaring, giving international audiences a bigger role in Hollywood studios' success. For Nightly Business Report, I'm Julia Borston in Los Angeles.
And that is Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us. Have a great evening, everybody, and we will see you back here tomorrow.